Hello everybody, it's Mel, the scientific trader. I'm doing this video, this webinar, because of the fact that unfortunately there were some people that said that the quality of the simulation in yesterday's webinar, the quality of the simulation in terms of the visual wasn't great, and I sort of went back and looked and I could see what they were saying. So I decided rather than replace the video from yesterday, what I would do is simply just do a webinar, but mainly just focus on a re-simulation. I can't duplicate the results of yesterday because every time obviously you do roll dice online, it's going to come up with a new random arrangement of data. So, I mean, that might be good anyway, because I mean, to rerun the simulation, we can get to see whether there's any differences between what we saw yesterday and today. So, hopefully you can see the spreadsheet better. What I've had to do is kind of rearrange things around for it to fit on the screen, but I'm hoping now you can get to see things a lot clearer. So just to sort of re-emphasize again, we've got 10 weeks. Week 1 to 5 is there. Week 6 to 10 is there. On the left-hand side, it denotes each particular day of the week that we're going to be doing results for. The starting, because the starting balance is here. The starting balance is £15,000. So by using, now this was what I need to say before I move on. There are different ways that you can actually roll with the percentage-based risk, the percentage-based risk approach. Some people do it trade by trade. So some of us do it day by day, and I do it week by week. The problem you have doing it trade by trade is, especially if you're running a cluster of trades at the same time, what it basically means is that you have to basically run them all at the same risk at the risk liability, because of the fact that they're all taking place at the same time. So one isn't sort of dependent on the other, what happens in the other trade, because they're all taking place at the same time. So I know there's some people that will do it day by day. So after Monday's results have come in, based on what the balance of their account is, then they'll apply the percentage-based rule, and then for the next Tuesday, the liability will change based on what the balance was the day before. I prefer to do it on a sort of weekly basis. It's just a personal preference. There's no sort of advantage behind it. It's just because I do a lot of my analysis is done on a weekly basis. It just makes sense for me to kind of roll that into my whole sort of weekly analysis model. So just wanted to let you know that that's the reason why I do it on a weekly basis in terms of my adjustment of my liability. Okay, so we've got the bank here starting off £15,000, which means if we apply a 1% liability for the trade, then if we lose the trade, it would be 1% of 15,000, which is minus £150. Because the reward to risk ratio of my trades is 3-to-1, it means that if I win £450. And this is what happens based on this. So basically for each day, most days I'm making at least 5 trades. And then obviously, if we hit Friday, Saturday, Sunday, those are the days where I normally push on additional trades after the initial 5. The only time that I will stop quickly is if I hit sort of 3 losses in a row straight out of the bat, or if within my first 5 trades I've won 1 trade but I've then lost another 4 at some point. At that point I also stop as well, because I only push on after 5 trades if I'm in the positive. And then what we've noticed from yesterday is that once I get to week number 2, because this balance here will change. In fact, what I should write is balance. We'll make it a bit easier for you. And then balance. So once I get to week number 2, the balance will either go up or down. The balance will either be higher or lower than 15,000. And as a result, it will have an impact on what the new liability should be. And then once I plug this new liability into here, it will then obviously change the win profit, still on a 3-to-1 basis, which will then change up here. So hopefully it all makes sense as we motor along. So what I'm going to do is just, I've got roll dice online here already. Oops. Right, here we go. Right. So everything's ready now, so let's roll. So within my first 5 trades, I've only had one win, one trade win, which basically means this is a minus 150. Three wins, that's 1050. Three wins again, 1050. This whole model is based on a win rate of 43%. So if you look at the webinar yesterday and the webinar 2 weeks ago, you'll see that part of my metrics is that my win rate is 43%. So I'm using a 7-sided dice to simulate a 43% environment, because 3 out of 7 is 43%. So if it's 1 to 3, the dice roll is 1 to 3, we count it as a win. If it's 4 to 7, we count it as a loss. So number 4, 2 wins, so that's 450. So we get to Friday. So Friday, I had 2 wins, which was £450. I'm pushing on, but then the next one is a loss, so that makes it a £300 Friday. Saturday, again, Saturday I actually had 3 wins, 1050 minus 150 is 900. And then on the Sunday, 1, 2, 3, 4, 5, 1, 2. So Sunday, 3 wins, and then a loss because the next one is a loss. So 1050 minus 150 equals £900. So the first week, £4,500 profit, which means as we go into week number 2, the balance of the account is now 19,500, which means when we roll with this week now, the liability, which is 1% of the new balance, there will now be £195 liability. So we change this now to 195, and as you will see, this will change and this will change. Here we go. I forgot to so that's equals J12 times 3. So this now becomes 585, and as you can see now, things have okay. So we're going to roll on to week number 2. So So there were 2 wins there. That's a 585. Two wins, 585 again. Two wins, which is another 585. This is 3 losses out of the bat, so that's a minus 585 there. We've gone to here we are. So we're on Friday. Again, it's 3 losses out of the bat, so minus 585. Saturday, we've had 3 wins, which is 1365, and then we push on. There's a loss there of 195. So for Saturday, the profit was 1170, and then for Sunday, there were 3 wins again, 1365, followed by a loss. So that was 1170. So in week number 2, the profit was 2925. So going into week 3, the balance is now 22,425. And as you can see, the liability now, because the liability is 1% of the deposit, for this week, the liability that we're going to be using is minus £224.25. What you'll see down here as well is that you'll see the profit so far generated in the first 2 weeks is 7,425. So what we do, minus 224.25. Okay, so when we actually change this, the profit per trade now becomes £672.75, which is 3 times the size of the liability. And this then obviously has an impact in terms of the profit and loss based on the number of wins and losses. So going into week number 3, so if I roll the dice again, so 3, 4, 2, 3, 4. So 2 wins, which is £672.25. Here we have 3 losses. One, two, three, four, 5. 1, 2. There were 2 wins here, which is 672.25. Again, 3 losses here. So it's a bit tick for tack so far in this week. We move on to Friday. Will we get any luck? So far there's 3 wins, which is 1569.75, but then we've also got we've got 2 more wins then a loss. So 2 more wins, and then a loss means that we end up with £2,691. Then on a Saturday, there were 3 losses there, 72.25, and then on a Sunday we had 2 wins, which is 672.25 minus a loss when we pushed on, minus 224.25. Sorry, I've got a calculator that's helping me to do all the equation, the additions and subtractions behind the scenes. So that becomes 448. So at the end of week 3, The profit made was 2,466.75, which means that the balance has now increased to 24,891.75, and which means that the new liability going into week number 4 is going to be minus 248.92, which should then change what our profit potential is, and then obviously this then impacts all of this. Okay. So moving on to week number 4. So I'm going to roll the dice again. 1, 2, 3, 4, 5. 1, 2. So we have 3 wins. And obviously, as the bank starts to increase, so does the profit potential. So we're going to start obviously seeing a big increase in terms of profit potential as we go along. 2, 3, 4, 5. 1, 2, another 3 wins. So another 172. 1742.44. 1, 2, 3, 4, 5. So here there were just 2 wins, so that's 746.76. 1, 2, 3, 4, 5. 1, 2, 3. Again, 3 wins here. 1742.44. So now we've come down to Friday. 1, 2, 3, 4, 5. So we've had 4 wins. 2,738.12. And then a loss, minus 248.92. I'll just do that again. 2,738.12. Take 248.9. So that comes to, so Friday, 2,240.28. On Saturday, it was 1 win and 4 losses. So that's a minus 248.76. And then on the Sunday, 2, 3, 4, 5, again, 1 win and 4 losses, minus 248.76. So basically at the end of week 4, this is actually the biggest week so far in terms of profit, with over £7,700 worth of profit. So that's going to have a massive reaction now in terms of the balance. The balance has now jumped from 24 to 32,000, which means that the new liability going into week 5 is going to be £326.09. So if we just make that change here we are. The profit made so far is 17,608. So now we're going up to week number 5. So look where our balance was at the beginning, and within 5 weeks the balance has doubled. It'd be interesting to compare this to the simulation that we did in yesterday's seminar, just to see how far off we are from the results from yesterday, but I'm sure you'll be able to sort of do that comparison yourself. I think yesterday there was a losing week in one of the first 3 weeks, but so far we've avoided any losing weeks. So we're going to go into week number 5 now. So week number 5 is, let's roll the dice. 1, 2, 3, 4, 5. So it was a 1 and a 4, so that's now minus. Okay, so we've started off with 2 losing days. 1, 2, 3, 4, 5. 2 wins, 978.27. So the beauty of a high reward to risk ratio strategy is that especially when your account really starts scaling up, the great thing is that when you get to the point where your account is, sort of 25, 30k, it means that you don't really need a lot of wins to make good profit per day. I mean, there were only 2 wins out of 5, and we're already close to £1,000 profit. I mean, that is really kind of like the ideal situation you want to be in, where you know that, just a couple of wins and you're hitting 1k in terms of profit. Now, yes, I do know that you could also hit 1k in losses, but what you're going to find is that there's very few days where you hit 3 losses out of the bat straight away. Yeah, very few days, as you've already seen. So let's carry on. So on to Thursday. So Thursday there were 3 wins. So 3586.99. Then Friday is a loss of 326. Moving on to Saturday. 1, 2, 3, 4, 5. Saturday there were 3 wins. The 3 wins is 2282.63 and a loss of 326.09. So Saturday was 1956.54, and then Sunday there were 2 wins. So we're at 978.27 so far. And then we had one of those premium hand days where we hit a hot streak of 3, 4, 5 wins, 5 wins on the trot. So that's, each win is 978.27 to add to the 2 wins in the first 5, which was 978.27. So this Sunday, 5869.62. I mean, that was, for the week, £11,000 of profit. I mean, that is just, that's, when you start hitting these levels, I mean, even, getting 7k per week, when you start hitting these levels, this is the stage of trading where your cash flow is completely transformed in terms of your day-to-day living. 11k, I mean, you think about a house mortgage or buying a car brand new, or going on a holiday, or investing in property, or paying your school fees, your kids' school fees for the year or the term, if you want to send them to private school. I mean, it's literally life transforming. It's life transforming results that we're seeing right here. Yeah, and so this is the beauty of, and you can only really kind of get this with models that are built on high reward to risk models. Yeah, so I think what you've got to think about in terms of your trading development is, are you willing to take on the pain of knowing that you're going to have a low win rate, but knowing that once your bank gets to 20k, 25, 30k, that all of that pain and investment of your mental collateral and psychology of having to deal with low win rates, all of that investment starts to pay back big time. Yeah, but this is, it's kind of like watching a caterpillar grow into a butterfly. So in week 1, week 2, week 3, but all of a sudden you hit week 4, 5, and there's just an incredible transformation in terms of how the results start to compound on top of each other. And again, the other thing to point out is we are not breaking the bank to do this. We're still using the model of 1% of our bank. 1% of our bank. 1% of our bank. We're not doing 4%. We're not doing 5%. We're not taking big risk in trying to sort of accelerate our bank as much as we can. We are still adopting the standard sort of orthodox principles of risk management that are normally found within financial trading. And so that's why, you know, you don't have to worry about risk of ruin, because we're not doing anything stupid in trying to. I mean, all we're doing is simply just following a systematic model and seeing how it starts to work week after week. So going into week 6 now, because of what's happening in week 5, going into week 6, it basically means that our loss per trade will now be minus 440.22, which means that every time we win now, it's going to be £1,320 for each trading win. Now, this is something which I spoke about yesterday, which is as you scale up from week 6 to week 7, things are going to, it's going to be like exponential leaps. And the decision that you really have to come to is, well, a number of things. I mean, number one, you have to sort of figure out, well, what is the level of income that you'll be happy with in order for you to get to the point where you don't need to keep increasing your liability each week. So that's question number one. Yeah. I mean, it depends. I mean, you might have been happy to keep your liability at minus 195 and be happy with, you know, earning £4,000 to £5,000 a week. I mean, if you're working and doing this on the side and you're able to achieve what we have in week 1, week 2, well, I think, you know, you've got, you know, question mark job security with your full-time job, and then you've got this additional income coming in. So for you, you might think, well, there's no real point. I don't need to keep increasing my liabilities, because at the end of the day, I'm happy with the level of income I've got. But the other thing you need to consider is also liquidity. So what this essentially means is, as your liability per trade starts to increase, it will then have a impact on the amount of time it takes for your orders to be taken up when you put them onto the exchange. Yeah. So if you put £150 worth of liability onto the exchange for the type of trading that you're doing, you know, that might get taken up within, I don't know, let's say 1 second, 2 seconds, 3 seconds. But, you know, if you start putting £440, well, obviously that will then increase the amount of time it takes for your orders to be taken up. Now, if you're dealing with very high liquid markets, then I suppose that the differential between 150 and 440 is probably not going to be that much. But if you are dealing in markets where it's sort of more exotic markets where liquidity isn't as great, then you'll probably notice a difference more here, where you may even have situations where you put your order into the market with £440 of liability, and then something happens in the game before the liability gets taken up for you to actually execute the trade and win. So that's why, for me, I think for myself, I said that once my liability hits £500 per trade, then that's when I'll stop, because I know that if I decide to push on where my liability per trade is like £7,000, £8,000, £1,000, then it's going to have a huge impact in terms of my win rate, because I'm then going to encounter a lot of trades where I'm waiting for my big liabilities to be taken up by the market, and then, you know, something happens, and then I'm not able to win the trade. And so so it's a judgment call that you have to make. What is that dividing line between maximizing as much as you can get out of this system before your win rate really starts to take a negative dip? So that's just something which there's no sort of hard or fast rules about. It's something that you're going to have to sort of decide based on what you're seeing in terms of your results and the way that the market responds to the orders that you're putting into the market. So week number 6. I mean, good God. I mean, I've had 4 wins, and that's already 4,842. The beauty of the simulation is that it really visually reaffirms the power of everything, because if I'm just talking to you about it, I don't think you really are able to get the full juice of the potency of this unless you actually see it like a sort of simulation. So we're on to Tuesday. Let me just move this back. So Tuesday we had 2 wins. So look, 2 wins is already bringing us to 1320.66. Wednesday, 3, 4, 5, 1, 2, 3, 3 wins, 3081.54. So virtually, because each win is now over sort of £1,000, it really is now making huge differences to our bank. There we had 3 losses, so that's minus 1320.66. And to be fair, having a losing day of 1,320.66 when your bank is 44,000, it's not. You sort of get to the point where it's not so much of a big deal anymore. Friday. So Friday and Saturday we had losses. Oops. And then on Sunday, 3, 4, 5. Sunday, 2 wins and then a loss. So that's 880.44. So, I mean, look at this week 6, quite interesting. We had 3 full losing days, but still managed to make over £6,000 profit. So the total profit so far now is, well, £35,000, which means that our bank is now sitting at just over £50,000. And I've reached what I would believe to be my maximum ceiling in terms of liabilities, because I said once it hits £500, I could decide to sort of show you what it's like going on to £1,000, but I think for me it's meaningless because I know where my level is. So minus 501.85. So we're going to go on to week 7 and see what happens. So there were 2 wins there, 1505.55. Three wins, 3512.95. That was a loss of minus 1505. Then we move on to Thursday. 3 wins, 3512.95. Then we move on to Friday. So Friday we have 1, 2, 3, 4. We had 4 wins. So that's 5,520.35. Take 501.85 equals, oops. Which is 5018.85. 3, 4, 5, 1, 2, 3. 3 wins. That's 3512.95, and then a loss. Take 501.85. And then on Sunday, 1, 2, 3. There were 2 wins. 15055.55. And then a loss, take 501.85. So that leaves 1455.37. So essentially, for week 7, £16,000 of profit. So when we go to week 8, you can see that the liability now, 1% of the new bank is £666.96, but I've graded out week 8, 9 and 10 because I'm going to stick with the 501.85. So there's going to be no more adjustment here, because I know that if I start putting on trades where my liability is more than £501, I kind of fear that it's going to start having, I mean, it may already have an impact on my win rate. Based on what I've seen in terms of liquidity of markets, once you start hitting, £600, £700, £800, £900 of liability, yeah, so what I mean again, so if I'm putting on £700 of liability, that means that if I win, it would be 2,100. But to get 2,100 or £700 of liability taken up, it could take a lot longer than you want. So that's why I'm sticking at the 501. So I'll roll the dice again. 472. So 2 wins is 1505. So I'll just motor along now. 2 wins. 2, 3, 4, 5. 2, 3, 4, 5. 1, 2. Final day of the week. That's 2 wins. This last day of the week came to so £9,000 made. The profit is already at £61,000. You can see that, if I was still following the 1% rule of my deposit, I'd now be placing trades for week 9 with liabilities of £762, but I'm sticking to the 501. So into week 9 we go. 4 wins. I suppose that's the one advantage that financial markets have over sports markets, is that the financial markets are highly liquid compared to sports markets. Two wins, 1505. Minus 15. 1, 2, 3, 4, 5. 1, 2, 3. 3 wins. 3512.95. 1, 3, 4, 5. 1, 2, 3. So on Friday, I've had 3 wins so far, and then a loss. This comes to 3011.1. Saturday, 3, 4, 5, 1. Saturday 2 wins, and then a loss. And then Sunday, it was so £11,000 profit, and then moving on to week number 10. 2 wins, 1505.55. 2, 3, 4, 5, 1, 2. Another 2, 3 to 3 wins there, 3512.95. Then 4, 1, 2, 3, 4, 5, 1, 2, 1505. Moving on to Friday. there were 2 wins and a loss, so that brings it down to 1. And then there's a loss there. And then 1, 2, 3, 4, 5. Again, that's 1. So the simulation has been completed. So the result is, I believe we're not far off from yesterday. I believe yesterday it was saying that the profit after 10 weeks was going to be 80,000. So we're pretty much on even with yesterday. So here goes. This is it. It's clearly, again, showing you the power of a high reward to risk model coupled with a percentage-based risk approach. So you may remember in the webinar we did last time, sorry, the webinar which I did, the webinar entitled the 90,000 Project Introduction, when we did the simulation, it was based on a fixed risk. I think the fixed risk was always £150. It was always £150. So regardless of the fact that the deposit was going up, we remained at £150, which meant that the profit and loss per day was based on wins and losses was always going to be constant. And I think after 10 weeks, we were at £30,000 profit, which was still good because after 10 weeks, if it's £30,000 profit, you extrapolate that out to 28 weeks, which is the length of this project, which is 7 months, then that 30,000 would put us in advance of sort of 80 to 90,000. So the power of the risk percentage-based approach is that after 10 weeks, we're already at 80,000. So, you know, if we extrapolated this to 28 weeks, you know, we'd be talking about £225,000. So I know for some it's going to be really hard actually engaging with this or probably even accepting it or embracing it. But that's probably because you've been trained to think a particular way when it comes to trading based on the types of methods that you've been using in the past, and you've been sort of basically you've basically been trained to think in a particular way that scale, you know, these types of this type of income level is something that is not the norm. You know, it should take years and years and years. Well, what takes years and years and years is basically trying to find a methodology which gives you the metrics that I've got. So, you know, I didn't just wake up one day and found a model that not only was 3 to 1, but also had the win rate to sustain it. Because you could have a model that is a 3 to 1 reward to risk, but your win rate is only like 15 or 20%, which obviously is not going to be able to sustain that type of reward to risk. So what takes a long time is the trials and tribulations of you know, the psychology of dealing with losses, of trying to find the right methodology, of going through different systems, of you know, breaking, going around like a Ferris wheel in terms of as soon as you hit losing streaks, you decide to move on to something else, or when you hit losing streaks, you decide to make changes to your model, which means you have to kind of reset and start all over again. That's what contributes to time. But when you do get to the level where you've actually found something which, you know, and it doesn't even have to be a 3 to 1. This works even with with a 2 to 1. So with a 2 to 1, it just basically means with a 2 to 1, your reward to risk is going to be less than a 3 to 1. But then with a 2 to 1, your win rate will be up. So normally with a 2 to 1, you're probably there with a win rate in the region of around 50%. So even with a 2 to 1, the only time that you know, there's a law called the law of decreasing returns, and it's only when you start reducing your reward to risk where it starts coming down to around sort of 1.3 to 1, 1.2 to 1, 1 to 1, once it starts coming down to those sort of levels, then there's a law called the law of decreasing returns, which essentially means that for the same amount of effort that you're putting in to your system in terms of the number of trades, you know, on an even standing with 2 to 1 or 3 to 1. So if you're still adopting this model of 5 trades Monday to Friday, Saturday, 5 trades Monday to Thursday, Friday, Saturday, Sundays when you push on, well, the law of decreasing returns will say is that if you're using a model which is 1.3 to 1 or less, then you're going to experience a lot less profit, or you're going to have to put in a lot more trades to reach the levels of 2 to 1, 3 to 1. You know, so instead of trading 5 times, you might have to be trading 10 times a day just to sort of maintain an even kill. And I've always, for me, I've always sort of adopted a scenario that I don't really want to be using a model where I've got to be dependent on trading 10 times a day at minimum. Some people can do it absolutely fine, but for myself, I just find that, you know, even when I'm pushing on Saturdays, Fridays, Saturdays, Sundays, when I start hitting trade 8, trade 9, trade 10, if it gets to that stage, I'm kind of like, you know, I'm just like, I just want it to end now. I've had enough for the day. So everybody to their own. And again, this is just to show you the power of the philosophy which I preach. And as I said, it's not for everybody. If it's not for you, don't get offended. Now, you know, part of the reason why a lot of system sellers don't like when we start talking about big numbers, well, it's number one, because the systems that they follow can't achieve this anyway. You know, so they're happy with, you know, having a bank of £50,000 and making £20,000 profit in a year. But the other thing is, well, which is, I think, is a valid concern, is they don't want people to have, they don't want people's expectations to be kind of dashed. So when people look at the figures that I'm quoting and then they start trading and then they come nowhere near it, then they're just completely demoralized because everything is held against the control of, you know, being able to hit these big figures. But I think at the end of the day, you know, I think at the end of the day, I can see the justification for that argument. But I think the reason why I'm such a strong advocate of pushing is because it was that possibility which I think it was that possibility that helped me to break free of thinking that I could only depend on systems that had sort of very low rates of return, you know, and pushing, and I just pushed, and then, you know, I eventually came across probability theorem, and, you know, I was always good at statistics when I was young, so it was something which I found really interesting. And all of a sudden I was like, hold on a sec, theoretically, what these guys are talking about, you know, the likes of Van Tharp and Peter Brandt, you know, a lot of these guys, what they're talking about completely makes sense. And that's what sort of turned everything upside down for me. But allied to this, and this is what I also wanted to say, because, you know, people keep asking me, you know, what trades do you do? What is your strategy? Well, I think the focus is not so much on what types of trades I do. The focus needs to be on what is the process you use. And that's where I think a lot of people kind of forth for the pot of gold at the end of the rainbow, because they think, oh, it's just all about finding the magic holy grail strategy. You know, so if we know what Mel does, if we know, you know, what he does, then we'll be able to make this level of income. And the truth of it is that maybe not, because allied to the types of trading I do, allied to that is the process, the discipline. I mean, for instance, you know, I've started this project, and, you know, after 11 days, I think I'm back down to £600 profit. I mean, I had a bad day yesterday. I think I lost £590, thanks to Empely, by the way. um, who scored late, and that would have enabled me to break even, and then the goal was disallowed. I couldn't believe it. I was already uploading my stats for the day, and then I was like, hold on a sec, why is my Betfair account not marrying up? And then I was horrified to look back and see that the goal had actually been cancelled. But yeah, I mean, after 10, so here I am, I'm talking about hitting £90,000 profit, and after 10 days, 11 days, I'm only at £600 profit. Now, if you're not disciplined, you kind of think, well, what's going on here? It's not working, things are not working, and you start being down in the dumps. But at the end of the day, I said that the whole part of this process is to really understand why you need to stick to the process, and why you need to understand that there are ebbs and flows on the journey. And it's not just going to be upwards and upwards and upwards and upwards when you're looking at things on a daily and a weekly basis. And so a lot of people need to change their mindset to know that what I'm trying to propel here is process. It's no good sort of saying, yeah, we know about that, Mel. Yeah, we know about psychology. Yeah, we know about process. Tell us what you do. Well, you can't just say yeah to things that are actually the building blocks of what I do. The process is very important. The sniper battle plan approach is very important. Because are you the sort of person that will just trade and hit 10, 15 losses in a day and then complain about it and say it's not working? Well, if you'd followed the battle plan, after 3 losses in a row, you would have been out, and your collateral would have been protected, your mindset would have been protected, and you can face a new day with a new challenge. Yeah. And, how I trade, this has taken me years to get to, in terms of my edge. And some people expect me just to be able just to tell everything. I mean, I'm already doing these webinars for free, yet there's certain people that have the expectation that I should just say everything that I do for free. and so my journey, my hardships, nobody wants to pay for it. It's just, let's just know what you do, Mel, every single thing. And so what I'm trying to convey with this sort of new series of webinars is that I'm not here to sort of go into the intricacies. I've already said that the way I trade is I look for 3-to-1 reward to risk relationships, and then what I do is look and test to see if I can get the strategy to a point where the win rate has reached a point where it makes the reward to win, the reward to risk, the number of currencies, and the win rate, it makes it balance into a system that is producing a positive expectancy, so that I know that on a monthly basis and over a large sample of trades, I'm going to be in the positive. And so it's really everybody's. It really comes down to each individual's commitment to doing what it takes to get to where they need to. So they can't blame anybody when things go wrong. Just what we saw happen with Psychoff. Psychoff would send out his tips, and when it wins, he's a god. He's the greatest thing since life began. And then when his tips went through variance, oh, it's a disaster, oh, it's crap, oh, Psychoff, blah, blah, blah. And so it's just this whole thing of transferring the accountability for one's actions to somebody else. It's always easy to do that. And so for me, that's why I'm just always a big believer in do it yourself, learn as much as you can. When I learned probability theorem from financial traders, and this is a very important fact, when I would speak to the likes of certain people in the financial trading space who are sometimes mentoring me, they never once revealed to me what their strategies were. I mean, I had a very high level overview, just like you might have a high level overview that I specialize a lot in late goals and looking at, possibly 2 or 3 goals scored during a match. take into account particular entry points and exit points. But they never revealed to me what their exact strategy was. And to tell you the truth, at the time, it was of no relevance to me because I was trying to take what they were teaching me and apply it to sports trading. But I never once said to them, "Oh, please tell me how you do it. Please tell me, you know, the fact that you've lost, nearly, £300,000 on experiences of hard knocks. Just give it to me for free." I never once said that to them. I always said, "Tell me what you can in terms of the theory, the principles, and I will take this and use it for myself, and I will find an answer." And that's the attitude that's got me to where I am. So I'm down to £600, and it's no bother whatsoever because I know that things will change, and in the next month, in the next 2 months, I won't be still at £600. So you've got to develop thick skin. You've got to develop this attitude that wins and losses, there's nothing you can do about it. You can't do anything about the way that results are actually distributed. You've simply just got to press on with your strategy. And until you embrace that, you'll never get far. You'll always be looking for the next thing. You'll always be changing your strategy, changing some profile, changing something, trying to get away from losing streaks, only to find that when you try your new system, it works well for 1 week, and then in the second week, all of a sudden, you're back to square one with losing streaks. It's a never-ending cycle. So are you going to continue chasing the pot at the end of the rainbow? Or are you going to do what it takes to make the changes that are needed to move on? So this is the end of this webinar, and this webinar is primarily aimed at just giving you a higher quality resolution of the simulation, and I'll be back with you at the end of the month where I'll be looking over my results for March. And please, 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 God, help me to not stay at £600 where I am right now. See you later. Bye bye.